Antonio, very good to be with you here in St. Moritz. It's a very special meeting, and I'm delighted to have you here. We're just talking about the exciting things at the company at the moment. But before we go there, for those that don't know you and your company, can you, in 1 minute, say what you guys do?
Of course. First of all, thank you so much. This event is one of the highlights of the year, not only because of the scenery, but also because we get to talk with, the trendsetters and most of the people that, try to look into the strategic movement. So it is a fantastic way to start off the year. As for us, we are Bondstone. We are an investment and asset management firm. We've been, in the past, very focused on equity strategies and acquisition of assets across all asset classes in Portugal. And we've recently moved into a more internationalization strategy, covering now also debt financing deals from most of Western Europe, from Spain all the way up to Germany.
Perfect. Can I ask you to tell a little bit more your views on Spain and Portugal specifically? Because you're very active, and we have a lot of people that will be watching us now that are wondering if they should go to these markets, or people that are considering maybe expanding their portfolio there. How do you feel about those markets?
The thing about Portugal and Spain is, by the way that macro trends have affected this particular region, most of the asset classes tend to perform very well. The fundamentals for asset classes such as hospitality, logistics, even resi, alternatives, PBSA, things that work fairly well across the Western world, they work particularly well in Portugal and Spain by way of how the fundamentals are working. We are obviously very, service-based economies with lots of exposure to tourism and leisure and hospitality, which means that we are not as affected by supply-driven inflation. We basically came out of this, crisis period somewhat better than what you see in Europe. They're still being forecasted, growth rates for Portugal and Spain at twice the speed of Europe. So the market, the local market works very well. What it lacks right now is, or it has been lacking, is of course liquidities, capital markets. And I do believe once we see a reactivation of deal flow of capital markets now working again, either as a function of going on the upper side of the economic curve, or as a function of a slight decrease in interest rates, or inflation being more or less in the manageable areas. Once we do have capital markets going, we expect a large inflow of capital going into these particular locations, Spain and Portugal, but just because of the fundamentals and how strong the operational side of most of asset classes are performing in Portugal and Spain.
One of the most important topics that we talk in real estate currently is interest rates, of course. And a lot of debt needs to be refinancing at the moment. There's some stress in some property owners. Am I right to say that you have just launched a debt platform? Is that linked with the scenario? Is this an opportunity to diversify what you guys doing? And can you tell us a bit more about that strategy?
Exactly. Yeah, it's completely true. We just recently launched a debt platform covering real estate deals from Spain all the way up to Germany, so literally covering all of Western Europe. And this obviously is a strategic decision based on what we're seeing, not only the trends right now, not only the picture as it is taken right now, but also the trends going forward. Yes, it's true. We all will have to learn to live with high interest rates, or if you like, higher than the couple of decades,
Super low.
which were super low. I'm not saying, obviously, even if this thing corrects by 150 or 200 bips, which is what we expect more or less this thing to land over the course of the next 2 to 3 years, interest rates are going to be higher, which means that the hurdle is going to be higher. And this means that not only there are projects that are supposed to perform well, which are real estate projects that tackle the fundamentals. That all are about fundamentals and are all about increasing value within the asset. And a lot of this comes from one way or the other, either through development or to a very serious refurb. And that's where we see a huge trend coming over the next quarters, even over the next years, which is a shift from real estate investment from what were traditionally the core plus C assets, all the way up to value add, and that's literally the wave that we're trying to surf here. Is trying to facilitate financing deals on the value add and sometimes even the opportunistic space to sponsors that are very knowledgeable, very senior what they do, and where we can basically be the catalyst by which they create value. Of course, this is much more interesting in a higher interest rate space where either as a function of liquidity or as a function of the overall economic context, the banks are being forced to retrench. Also, as a regulatory tendency, we don't expect a return to the past from the commercial and traditional banking sector, which means that we do believe that this particular trend of literally providing, financing, and facilitating deals that are all about creating value will continue regardless of what happens to interest rates. So we do believe that either more than just a tactical short-term strategy, we believe that this is exactly a long-term winning strategy.
Very interesting. Antonio, thank you very much. Appreciate your time.
My pleasure.
Always good speaking to you. Thank you.
My pleasure. Thank you so much.